What's going on, traders? Welcome back to another video. Today we're going to be walking you through some of the trades on the day. Now, I did have a live video going, but I ended up messing that up and I had to do a ton of editing, so I didn't want to do that, so we're just going to do a video recap here. So first stock we're traded today, maybe not necessarily the first, but we'll walk through this one. This is CHGG. Now, this is a stock we covered on the morning watch list, in which I actually wanted to see it go long, which it might start pushing higher on the day now, just not in the beginning of the day. So there are a couple trades here. Looks like we did 3 trades on this. So first trade on CHGG. So, you know, bell opens, stock drops dramatically, then it bounces all the way back up into its pre-market resistance. So I took a short, 2,000 shares right here. Let me zoom out, probably look a little bit better. I'll just read them to you. So took a short here, 2,000 shares, 37.94. Right at this, like, you know, 37.94, that was basically at the $38 resistance. Well, we get a fake out candle where, you know, basically you're trying to manipulate the price, squeeze us out, which they probably squeezed out a few. So price jumps up. I notice it. I short another 500 shares at 38.08, you know, above 38 this time. So first short is 2,000 at resistance. We get this fake out candle that breaks over, you know, where I entered. Then I short another 500 shares at 38.08. We get the drop down, the breakdown. I cover up 1,000 shares at 37.78. Another 500 shares at 37.73. And then the last 1,000 shares at 37.65. So I had 2 entries and 3 exits on that trade. Next trade here was a $500 short. I got a terrible fill. I tried to short at the beginning of this red candle. I'll zoom in a little bit. Tried to short here at the beginning of this red candle. As soon as I clicked short, price dropped all the way down to the bottom. So I ended up getting filled at 37.86, which is like right there where my cursor's at. But regardless, ends up dropping down, breaking the VWAP. I covered 250 shares at 37.55. You know, so we're at a good win, and then you know, getting squeezed out a little bit. You know, let it run up to 37.87. So, you know, I short 500, cover some up half down here at 37.55, and then it squeezes all the way back up to 37.87. And remember, my entry was 37.86. So think about it. 37.86, 500 shares short, take off half here, get squeezed back up, half at my entry. That was a complete wash trade where I'm short. If I would have covered up all here, would have been a win, but since I let it go against me a little bit on the pullback for half shares, ended up being a wash trade. Over here, I took this little stab trade, 600 shares. We kind of broke this little wedge pattern, a little bit of low volume. Like, well, maybe it'll turn into a fader. So shorted 600, it ended up squeezing up here. I let it squeeze, pull back, realize, well, it's probably gonna move higher. Took my 600 shares off, so another little small win of like 140 bucks, or small loss of like 140. So to recap this one, CHG, I wanted it to go long in the morning for a gap and go type of setup, just didn't happen. You see, we had the one wash candle, big squeeze candle, couldn't make it, and then it breaks down. I waited till it got to pre-market resistance, shorted, covered up at VWAP, seen more weakness, shorted, wash trade, and then another one over here, shorted, nothing. Right, so 1 win, 2 losers. Actually, not really. 1 win, 1 wash, 1 loss. Next trade is SHOP, SHOP. So SHOP had earnings today. Now, this was a trade from yesterday that I closed out today that I figured I'd put in here. So I did a 50 share short. This was before Shopify's earnings, their earnings report. Now, let me guess, Connor, but you said buying before earnings is extremely risky. I always tell people don't buy before earnings. It's extremely risky. It is extremely risky. It's super risky buying before earnings. But well, look at my share size. It was only 50 shares. Not necessarily only, but it was only 50 shares. So it's not like I'm swinging for the fence on one. I knew the volatility was going to be big, so I didn't go big size. Right, so 50 shares got me a $382 win. Oh, yeah, on CHGG, what was it? So on CHGG, we finished the day 531 profits, and then going back over to Shopify here. Again, we did a 50 share short. This was an after hours yesterday once the bell closed. Anticipating a decrease in their earnings. So I shorted 50 shares at 173.75 and covered up those 50 shares at 165.52. So I made it almost I made $7 a share there on that trade. So that was really nice. That was fun. Now, talking a little bit more about this, you know, I've been trading for a long time, so, you know, there's some things that I kind of have a gut feeling about that I really trust and I'll try. And this is one of those situations, right? I just kind of had a gut feeling that Shopify was going to decrease on earnings day. So I shorted them, and sure enough, I was right. And I did the same thing with Netflix. I had a gut feeling Netflix's last earnings was going to decrease, so I shorted Netflix and was correct about that one as well. And there's some things that you guys you'll pick up on over time. You can pay attention to, but basically whatever the market is telling you, it's usually going to do the exact opposite. So what I mean by that is when classic example. Remember how I always tell you guys not to pay too close attention to what analysts are saying and their price targets and all this, because their price targets are usually just a bunch of bullshit. And most oftentimes, and here's the thing, is these price targets, they never come with a timeline. So it's like, yeah, you know, I could just say, you know, like Netflix is going to hit a price of $3.90. Like probably, you know, at some point in its entirety, it'll probably hit $3.90 again. So again, don't necessarily pay too much attention to those analysts, you know, price targets. But also pay attention to them, because when a bunch of analysts come out and say, oh, price target is to this and price target's to that, it's like, well, if I was playing poker, I wouldn't really want to tell you my hand. So always think about that. The market isn't necessarily there for you to win entirely. It's actually there to take all your money. That's exactly what it's there for. This market is meant to chop you up and spit you out and take all your money. Okay? That's why it's very easy to sign up for brokerage accounts. You know, that's why it doesn't really take much. That's why most of these brokerage companies don't really give you a big whole masterclass on what to do and what not to do before you start trading. Say, hey, here's your account deposit. Start trading immediately and give us your money. So it's not really meant for you to win. That's why trading's so hard. But, you know, this is one of those gut feelings. You kind of pick up on things over time. And for me, now don't take this 100%. You still have to, you know, you have to have that gut feeling. But a lot of times I notice that analysts are usually wrong. And whatever they say is usually the opposite initially. Meaning, like, for example, Netflix runs up until its earnings day, has a killer month of just running up like crazy. And what do you think happens the day before earnings? JP Morgan, this bank, this guy, he, she, this dog, that cat, this goldfish, all give Netflix an upgrade of $420, $390, $450, $500 price targets. Like, oh, really? You think Netflix is going to increase by $100 tomorrow or in 2 weeks or in 3 weeks? Definitely not. Netflix is definitely not going that high in a couple days. So that price target they gave you is the timeline on it's not for a long time, if you mean what I'm saying. So when we see Netflix run up like massive into earnings, and then all of a sudden the day before, oh, Netflix price target this, Netflix price target that, raise. You know what I'm thinking? Hell no, it's not going higher. It's going lower. If they're all giving it a price target raise before earnings, you know, that's kind of like me saying, hey, I'm just going to put a fishing line out there and just try and reel in you suckers. Right? I'm going to give it price targets of 450, 500 after a whole month of bullish trading. A very novice, you know, trader that doesn't know better would go, oh, look at Netflix. It's been running like crazy and it's about to have an earnings report. And all these big banks that make so much money and they're so professional and they're so smart are all telling me that the price target's all the way at 400, 450. I should be buying this. No, they're just using your buys to get out with their sells. So when they give you that price target raise, they're probably just doing that to lure in some dumb money to buy the shares they want to sell. And then if you go look at the earnings report of Netflix, of course, it crashes that day. So now do we start calling all these analysts at JP Morgan and Deutsche Bank all idiots and they suck at their job? Right? Because that's what you would do, right? If you were, you know, some stock guy like me and you're always wrong, wouldn't you say he sucks? Right? So do JP Morgan analysts, do they all suck? Are they really bad? Do they really not know the direction that Netflix was going that day? Are they really that terrible? Did they lose money? They all thought the price target was 500, 450. Do you actually think they were losing money that day? Hell no. They were breaking in the dough, baby. They were selling their positions they had for months on those dumb investors coming in thinking price targets are 450 today or tomorrow. It's not the case, right? They're not dumb. They know what they're doing, right? It's a game. It's a competition. It's a competitive market. You don't want your competitor knowing exactly what you're doing every single time. Right? So sure, why not throw out a price target, you know, start making people confused and things like that. And that is exactly what happens in this market. Don't think it doesn't. Right? So enough of Shopify here, but it was, you know, 50 shares short. They say it's going to get price target raises. Hell no, it's not. This thing was into a 52-week high, I believe. right? I think it was all the way into a 52-week high. Like, this thing was not getting, regardless, you know, you guys get the point. All right, let's move on to the next one on the day. Which is, what is it called? I can't remember the name right now. Oh, VRNS, that's right, VRNS, which we are still long bias on right now. So VRNS was an earnings play today. Gapping down, big gap down, massive gap down, right? And, you know, I see it open up on the day. It squeezes up, does one of these rolling over shorts, grinds back up. We get a strong push over previous high. At this point, I knew that sentiment was most likely turning bullish and that there were still some short sellers or seller biased traders in here. They were thinking, well, maybe it could still come down, right? So, you know, this is a big gap down stock. It pushes up, it pulls back, it grinds up, it breaks over the previous high. Once we get the break over this previous high, you know, that's when sentiment in my mind's like, okay, well, that's a really bullish move. But we haven't fully really broke on the day, so we haven't really gone too bullish. So that means that there's probably going to be some sellers in here, maybe even still some short sellers lingering around. And since we haven't fully broken out, we could still squeeze out maybe a couple more short sellers if there are any. I'm like, all right. So, you know, it's a big gap down, and then in after hours trading, it had this resistance right here at whatever level that's at, 51.95. All right, I had this resistance here at 51.95. So, or what am I saying? It had this resistance at 52. Just call it 52. It had resistance at 52. So going up, you see it shoots up to 52, which was the pre-market after hours kind of consolidation resistance spot. So it gets right to 58. Look at push, candle down, breaks out, candle down, pushes up, candle down, pushes up again, candle down, pushes up again, candle down, down, and without breaking down. So at this point, I knew that this is probably looking for a move up and out. So I ended up getting 600 shares long on the bottom of this red candle, close to 51.82 is my entry, 600 shares. We push up, we kind of break out a little bit. I see that this, once it broke out, you know, kind of break out this wedge flag pattern, it wasn't going with tremendous strength. I thought we would just get a nice quick pop, you know, one of those big candles. So when we didn't get that big pop, it made me kind of think, okay, maybe this isn't what I was initially planning for, which was a nice, fast, short squeeze, big push, momentum play. So I'm like, well, if I'm not going to get that, then let's shift gears and let's think that this could just result in one of kind of the slower grinding stocks for the day. And you definitely can't go wrong by playing it safe. So I went in 600 shares long, didn't get the move that I was envisioning in my mind. So I immediately took off 500 shares and locked in the money I did. Right, so I went in 51.82, shot up to 52.41, right, or yeah, 52.41. So right there was about a 60-cent trade, 600 shares. So I take off 500. I leave on 100. We get another little push. I take off 50 shares at 52.95. And then I leave 50 shares on to let it ride throughout the day. So we've been holding 50 shares throughout this nice move, just basically putting a cherry on the top of this trade. So open P&L for 50 shares is $181. So just know that you can make significant dollars with low shares sometimes. Now, the reason I'm still holding this stock is because if we go back into its yearly chart here, you'll see that this was its last earnings day where it gapped down significantly. And look what happened, right? Earnings day, gaps down, whole day gets bought up, then runs into a nice grinding move. So look what happened today. Earnings day, gaps down. It's been a whole green day ever since. So basically played off of the history of the stock, that it gaps down and gets bought up on its earnings day. So I played the same way, same thing, and sure enough, it's been a solid trade all day long. And now I'm going to turn this into a swing trade, anticipating that maybe some of this will take place as well. All right. So, you know, like even here, this is actually, you know, probably, hell, it's, you know, so that's just it. We're going to hold 50 shares, you know, swing it out, see what happens. So nonetheless, nice, good, solid green day here, 529. So we've had about a $1,300 trading day, all said and done with commission. So pretty good day here. Hope you guys liked the video. Once again, if you guys have any comments, questions, you always put them down below, which I'm not the best at honestly getting at the comments and questions because there's just so many, but it helps me read through them and see where you guys are kind of at and what videos you guys like. But other than that, thanks again for tuning in. And if you guys ever want, you can check out the first link in the description. That will get you involved in our private kind of trading group and trading team. I myself and my team moderator, Brandon Walsh, really good trader, primarily focuses on options for the most part. But he's in our chat room too, and we all go live, and we're able to kind of run you guys through some watch lists early in the morning and things like that, and then we trade live. So if you guys are interested, first link in the description. If not, you guys know where to find me, right on YouTube, baby. All right, I'll see you guys on the next one.